the stock and the company that everyone's talking about this morning is PG Electroplast after a note by HDFC Sky raising some concerns on the financials of the company. Pramod Chimmanlal Gupta, the Chief Financial Officer of PG Electroplast, speaking exclusively with NDTV Profit this morning. Mr. Gupta, I appreciate you taking our call and agreeing to answer our questions, because I think investors want to understand what are these concerns. Now, some of the things that HDFC Sky has highlighted include rising leverage, weakening cash flows, and growing debt commitments. Why don't we start there?
Yeah, so ma'am, if you look at it, we are actually a net cash company, and we have been so for almost last 12 months. In fact, our gross debt is just about 400 crores. We are carrying more than 600 crores of cash and fixed deposit in the balance sheet. And this is despite the fact that this year we have probably in the first 9 months done more than 450 crores of capex. So there is no question of any leverage rising or any liquidity issue at all in the company. So this article which has been written seems to be having very wrong facts. In fact, all the data points which they are saying is not about PG. It's like, I think they have done analysis of some other company and written about PG.
Wow. Are you saying they got it completely wrong? Okay, so what is your working capital cycle? They claim that your working capital cycle is shrinking. So give us some perspective on that. What was it? What is it now? Is it coming down?
See, working capital cycle will shrink now. See, in the first half this year, the AC season got curtailed in the month of June itself, late June, because of the early monsoon. And that is why we were carrying a high amount of inventory, which was there till recently. And as we had guided that post-November things will start getting normalized, and that has happened with us. We were carrying at the end of March and at the end of September and June about 1,300 crores of inventory, but this is all paid inventory. It is the inventory which has been paid for by the company through the cash. And if you look at my receivables plus other fixed assets, which is large, other current assets, which is largely basically the ITC or the credit input GST credit which I have, that is equal to my payables amount. So actually, it's a paid inventory which I'm carrying, and which I was carrying 1,300 crore, which is getting converted. It was largely raw material for AC, which is now getting converted, and we have almost normalized it as per our business plan. So there is no reason to worry on the working capital as well.
Just so that we can understand. Just so that, and good morning to you, sir. Just so we can understand, what is the number of days that you're operating on currently?
See, the current day is probably higher or at around 80 days. Normally, this period of time, it is about 60-65 days. But as I was telling you, it is largely because of the AC inventory, which we were carrying, excess AC inventory, which we were carrying for about 1 month production, which in our case comes to be about 3.5 lakh ACs and close to 500 odd crores. But it is all paid. It is not taken on credit or anything. And if you see the total inventory which I have is close to 1356 crores, 1360 plus 1365 crores as of September end, while my total short-term debt was 200 crores and my long-term debt is only 176 crores in the balance sheet of the company which we have reported. So there is no question of anything, and we are carrying a cash of more than 600 crores.
Okay. Mr. Gupta, good morning. Neeraj here.
Yeah.
Elevated inventory, softer first half cash flows. One of the beliefs is that this will normalize in H2 because H1 was exceptional for most companies in your sector. Would you guide to that officially?
Yeah, we had guided for that, and in fact we had told in the post-results conference call that we expect it to normalize by November end, and we have seen that normalization. Typically, we carry about a 1 month worth of AC production raw material inventory. But because of the slow quarter in the second quarter and first quarter cancellations, we were having close to 2.5 months of AC inventory, AC raw material inventory, which has normalized now in the last 2 months. So right now, our inventory levels are very normal. They are just about 1 month of production or so.
Okay.
And,
And Mr. Gupta, I don't have a complete handle on your operating cash flows currently, but do you reckon your payment schedules, maybe for short-term debt, maybe for working capital requirements, etc., could all be serviced by operating cash flow, or would you need
yes,
to raise
yes,
any
yes.
capital in the next 6 months for the same equity
No,
capital?
we don't need to raise any
You don't.
debt or equity capital at all.
Okay.
As I'm saying, we are carrying a net cash, and we have actually been carrying that for last 12 months because we are having excess cash in the balance sheet of almost close to 600 plus crores. And obviously, some of it is earmarked for the capex. This year, we are taking a very large capex of almost close to 700 to 750 odd crores, out of which 400 plus crores has already happened in the first 12 months, first 9 months. And we are on track to do that, and everything will be managed from the internal cash flows and the liquidity in the balance sheet. I also want to highlight that we have reiterated our guidance, which we gave after Q1, post the Q2 results also, despite the fact that Q2 results were not very good because we saw a very sharp decline in the AC business of almost close to 47% year on year. Despite that, we have reiterated that we will be doing about 5,700 to 5,800 crores of sale and 300 crores of 300 to 310 crores of profit. Although in the first half we have done a profit of only 70 crores, so we remain on track on that.
Okay, no, so just to reiterate that guidance, 5,700 to 5,800 crore for FY26 in terms of your sales and 300 to 310 for your profits. 300 to 310 crores for your profits. You're staying with that?
Yes, yes.
What are your current debt levels, Mr. Gupta? Because that seems to be the concern.
Total gross debt on the balance sheet is 400 crores. I'm again reiterating, we are having 600 crores plus 600 odd crores of cash and fixed deposit in the balance sheet. And my net worth is more than almost close to 3,000 crores right now. This by no means the debt is any issue at all, actually. And long-term debt stays only at 176 crores as of last September, September 25. So there are no challenges at all on the debt or short-term or long-term debt at all.
Issue here, Mr. Gupta, is that because we saw something with Keynes Tech also last week, is there a problem in the larger EMS space? What has happened here in this case? You said at the start of this interview, maybe they've written about some other company and written your company's name by mistake. What do you think has happened?
Look, I have no idea that analyst can answer, because whatever numbers or analysis they are making is just not making sense, and that's why we have given a clarification in the morning, in the evening yesterday itself, that our numbers remain one of the best in the industry, despite the fact that AC season was not great. In the first half, we had a very good operating margin, probably one of the highest, about 7% in the industry, in the peer set, which do AC manufacturing. And we have posted profits in both the quarter. Balance sheet remains very solid. There's no reason at all to worry, have any issue or any worry in the company.
So, couple of points, Mr. Gupta. I just want to check if there's any delay on the PLI schemes
No. See, we typically recognize the PLI money as and when we receive it. So, for the financial year 24, we received it in March 25, at the end of March 25. And for the financial year 25, the PLI, we have just in the process of filing our claim. And we will be getting our payment before March. That has been the usual practice for the last 2 years, and we have been following that. So we actually accrue PLI on the cash basis, and we are very sure we have achieved all the targets, both investment and incremental sales. So there should not be any challenge on PLI.
Couple of other things that I wanted to know about. You've done 400 crore of capex out of 700 that was charted. The remainder 300 crore, you're confirming this will be done through internal accruals, no plan to raise additional debt?
No.
Okay.
See, we have additional, as I was saying, additional cash right now, which has been earmarked for capex, and that is the way it was done. This fundraise was done last year in December 2024. That is one. Second thing is, we should now see a lot of our inventory getting actually converting into cash, because all this orders which we had for ACs in the month of October, November, December, we have been delivering to our clients, and all of it is going to get converted. Excess inventory is going to convert into cash. So there's no challenge at all on that front.
And one last question from my side, Mr. Gupta, which is, you said that the normal days for working capital is 60 to 65, and you're currently at elevated 80, and you explained why. When do you anticipate you will go back to 60 to 65?
See, this is typically happens in the period of June to September. Typically, March is relatively higher because that is a peak AC season, manufacturing season, and that is also a time when, because of Chinese New Year, we need to keep some additional inventory for the imported raw material. So March, it will not be still visible at maybe 60 to 65 days. It will be probably close to 70, 75 days. But by June and September next year, it will be in the same range, 60 plus or 60 plus minus 3, 4, 5 days. And I'm telling you, like, the inventory level this year was because of the whole industry-wide issue. It was not just very specific to us only. Everybody probably saw some kind of an inventory pile up at their end because the season was abruptly ended in June, AC.
Yep. Well, wish you all the best for all of that and more, Mr. Gupta, and thanks so much for joining in and giving us all of that perspective.